Hello, and welcome to another update video about Solana. Yeah, this starts to look really interesting because here on the daily chart we can see now that the price has shown really nice upside momentum since there has been this reaction around the 22nd, 23rd of December to the support area for this wave 4 in an unfolding fifth wave. So the wave count on the daily chart hasn't changed in many weeks or even months. So the idea is still that we are in an unfolding upside or uptrend. More specifically, it's called a fifth wave that started in August, and within this fifth wave, we are tracking, as you know, a 5-wave pattern. Wave 1, wave 2, wave 3, wave 4, and a possible fifth wave to the upside, which, as I said, might have now started, and that could be the last wave in this cycle. Now the question is, of course, has this fifth wave already started? I can tell you we are not out of the woods yet. The price is not broken really out to the upside on the daily chart, but on the smaller time frame we had some really nice movements, and an upside breakout was locally at least confirmed with a break above the 200-220 level. So we had a support area also on the smaller time frame. We're going to take a look at that. That was suitable for pullback traders. I mentioned to you many times the $202.20 level, which was a level for breakout traders. In both cases, you could have positioned if you wanted to, and the price is now moving up in the right direction, which is up. The main question was, do we get another low or not? But overall, as part of this recovery thesis here, and the market has taken the direct path, which is absolutely okay. I guess most people are okay with that. That's also in line with what we see currently across the altcoin sector and actually on the Bitcoin dominance chart, which I shared earlier today in the Bitcoin video. If you haven't watched it, make sure to check it out. But overall, the idea is that we are now tracking this fifth wave, right? I mean, that's why I highlighted to you the $202.20 level and said if we break above it, we can track this fifth wave to the upside. Bear in mind that this move up from the August low as a 5-wave move, 1, 2, 3, 4, 5, is likely going to be a diagonal pattern, which means wave 3 was an A, B, C structure. Sorry, that was very drawn, very ugly way. A, B, C. And the fifth wave would also be an A, B, C structure, right? A, B, C. So it's likely going to be a bit choppy. It's not going to be easy to track. It's going to be a bit ugly, but it's okay. It's still a valid scenario, and it's just going to be a bit challenging to track it on the way up on the micro level. But we still give our best here. What I want to show you here again is this is this Elliott wave triangle I showed, which obviously is there for anybody who wanted to position potentially. Shows you how you could put, scale in. That's when we put these triangles, just to visualize it. I put that onto the chart at some point, just to show how it can make sense to, let's say, scale in the decline all the way to the lower end of the support area. At some point, you obviously have to stop out, but the idea is usually, from an Elliott wave point of view, that adding positions in pullback areas can make sense slowly on the way down because it's catching the falling knife. And you don't want to be too aggressive up here, which is why the triangle is, still small at that point, right? But the wider it gets, the larger the position. And that gives you a good way of, DCA in, dollar cost averaging, layering in positions with a larger position size as we go lower. Obviously, everything considering overall risk management, right? So the overall position size needs to be handled in a way that it is still low risk and high reward. But yeah, you can see you would have received a good entry average price and you would be in profit now. But this just, regarding what is generally reasonable to do from an Elliott wave point of view. That said, trading a fourth wave in a diagonal requires more skill than, for example, a 1-2 setup. Now let's go to the smaller time frame. Here you can see the detailed wave count. You can also see here in detail the reaction to the support area. There were two reactions. One was on the 20th of December. The other reaction was on the 23rd of December. We had an upside breakout above the key level that I mentioned at $202.20, which was the swing high that formed on the 21st of December. And whether you acted as a breakout trader or a pullback trader, in both scenarios, the price followed the forecast. And yeah, for sure. I mean, we could have seen another low, but that would have just been in line with the idea of scaling into the support area. You know, would have allowed you to maybe add another position. Now, careful. I'm not telling you to do this. I'm telling you what is generally a reasonable strategy from an Elliott wave point of view, because people want to know how you can trade with Elliott wave. And you can trade with Elliott wave, as I said, in different ways. You can trade breakouts, you can trade pullbacks, but the scaling in approach is a good way of adding positions when people are normally fearful. So now we see the market go up further here, and it's important now that everybody who has profit, who is in profit, I would recommend people to just manage risk now and maybe even take the risk out, which means adjusting stop losses and whatnot. But main takeaway is the move up is to the upside, is not impulsive. So that's a big warning. But there's no need for it to be impulsive, even if wave 5 to the upside has started, because as I explained, it's likely going to be an ABC structure, which is likely going to be choppy. Now, I shared with you the idea that this could be in the yellow wave count, some kind of a diagonal pattern, wave 1, wave 2, a very complex third wave, then wave 4, wave 5. And at the moment, the nearest support area I can offer is between $201.17 and $208.58. This shifted from yesterday because the price pushed higher, actually reacted to the support area I shared with you here yesterday. But it's not very clear if, from a micro count point of view, if this internal fourth wave already happened, or maybe we're still in the internal third. That's a bit unclear to me. But again, it's a diagonal pattern, so there will always be more than just one interpretation. Main takeaway is the more direct, aggressive uptrend is likely going to lose steam with a break below $201.17. If we then see a break below $194.87, it could indicate that a more substantial top has formed already. But I will stay close to that. I will update these levels if needed throughout the day for our gold members, and then there will be the next video tomorrow. We'll talk about any adjustments in structure. For now, these are the levels to watch. Most importantly as well, the price has reached the 138% extension, which is the first ideal target for this larger third wave. And it is also, was not this one, this one. 1 second. It's the first ideal target for this third wave, and could indicate that this fourth wave here, this one, starts soon. Oops, I did shift these previous. Okay, need to put that back. Okay, yeah. Anyway, target area has been reached now. Doesn't mean we have to stop there. Just means that now we've moved from support to the first target I mentioned, and that means be on the side of caution now. Without any top confirmation, however, the uptrend is set to continue a little bit. Maybe we'll reach $223 next. That's the update about Solana. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.